So this is the US 30, Dow 30, as sometimes it's otherwise known. Analysis for Monday, the 2nd of October, and I only normally do one video a week on this financial instrument, but yeah, I might be doing a few more videos on it going forward. But yeah, so let's have a look on the monthly time frame. Now, I've mentioned in the previous video, I mentioned this one as well. The stock markets and stock markets in general tend to be long biased. Like, for example, what do I mean by that? Well, over the long term, they tend to go up and make new record highs. It's unlike currencies where you could potentially see them in a range where they go up 1 year, where they go up a couple of years and then come back down, and go down a couple of years. Whereas the stock markets over time, they tend to just go on to make new highs. You do get pullbacks, like for example, let's just have a quick look, like in around 2000 with the tech boom and the so-called tech bubble. You've also got 2007, late 2007, 2008, all the way up until 2009, where we did have quite a sizable pullback. But ever since then, as you can see, if you were buying the US stock market, you would have been quite happy with its outcome. Now, on the monthly time frame, what can I say? We're in a strong bullish trend. We've got months upon months of consecutive gains. The last month to end up bearish was all the way back in March of this year. But ever since there was the US election, the market has eked out positive gains every single month except in March. So overall, would say the market is bullish. Overall, you'd say the market is bullish. And on the weekly time frame, again, we are bullish. We did had a couple of weeks where we did get a few bearish closes on those weeks where we were in a bit of a consolidation, but we successfully broke it last month. The past couple of weeks, at least, there has been a bit of a shrinkage in volatility. Weekly candles don't have much of a range to them. Not many wicks to the upside, not many wicks to the downside. So it's just a slow continuation to the upside, really. Let's just have a look. Let's just see where my most important pivots should be this week. Is at 22,391. 22,391. Go down to the hourly chart. And I'm going to put on the chart 22,391. So it's around about there. And let's just get 391. 22,391. Okay, so we've got 22,391. That's where we've opened this week. The thing I don't like about it is already looking at the charts, it's quite close to last week's weekly pivot at 22,338. It's quite. It's just so close. It's a bit annoying, but I did mention in the high time frame analysis that we have had a somewhat bit of a contraction in volatility. So let's just have a look. Downside targets again. Well, we could look at the hourly time frame. Let's just go out to the 4 hour time frame. 4 hour, yeah. Okay, downs potential. Say we don't continue our breakout of this channel. Downside targets, you'll be looking at 2238. Beneath that, you'll be looking at 2280. Is it? Yeah, just say 2280. 2280. Beneath that, you'll be looking at 22.20, and I suppose I could just get a weekly chart up. No, the level's a bit too far away there. So on the 4-hour chart, we're looking at, I said 2280. Again, if I zoom out a bit more for some perspective, again, let's just see. Then potentially 22,000. Yeah, potentially 22,000. So downside somewhat limited, and to the upside, well, prices could consolidate when we've reached the halfway mark to 23,000. Well, not halfway mark. Let's say when we reach 22,500, could get into a bit of a consolidation. It being a nice round number, but I do expect prices to continue the breakout to the upside. So before I go, LCS, like, comment, subscribe. Thanks for watching.